Hello guys, my name is Abhinav Agarwal and welcome to a new video. In this video, we will be discussing about different types of financial models, uh, examples of different modeling techniques. So from my experience, I have listed down top 9 models that you should know for you to really get started, different techniques. And it is very important because what I have seen in my last few years, mostly majority of the FP&A professionals spends their 75% of their time in building all these models. And definitely these models, these things become very critical for any management or decision making. So, starting from budgeting model, as you understand, budgeting models are built to forecast future revenues, expenses, cash for setting different targets, resource allocations. Different types of modeling techniques for budgeting model includes top-down, bottom-up, combination of top-down, bottom-up, driver-based budgeting, zero-based budgeting. Then there are activity-based budgeting. So, all these techniques, the choice of technique will depend upon your organization to organization. However, for you to get started, you should have an idea, how to design a model basis any technique. And don't worry, in our upcoming videos, I will ensure that we will cover each and every technique through live practical illustrations. Talking about forecasting model, again, forecasting model is used for predicting performance based on current trends. That is mostly required in case you want to proactively adjust your numbers, make it more aligned to the real life scenarios. Certain examples of modeling in terms of forecasting includes building a rolling forecast model, reforecasting techniques. You can use different scientific methods like regression, moving averages, exponential averages to build a forecasting model. Talking about cash flow model, and trust me, it's one of the favorite model for the management. And for every company, cash is very critical, and tracking cash movement is very important to manage the liquidity. So there are different methods to build a cash model, be it direct method, indirect method, and there is a concept of 13-week cash flow that is mostly a combination of forecasting as well as cash flow model. So this is a very critical model, and it is very important for you to know because it's very common these days on how to build a rolling forecast model to predict, to track the cash movement. Okay, coming to the profitability model is built to analyze the product profitability, your business unit profitability, your department profitability. Certain techniques to achieve that includes contribution margin analysis, break even analysis, activity based costing. So these are certain techniques. Let me also write break even here. Okay. Sensitivity analysis is very common today in this dynamic, world. Basically, it is used to evaluate the impact of changes on the financial outcomes. You want to just check, how your different kind of drivers in your business impacts the overall financial outcomes, and it is very important to do that for managing risk. Certain and very commonly used technique is Monte Carlo simulation along with tornado diagrams. Talking about valuation model, it is used for estimating company asset value for strategic decisions like mergers, acquisitions, or investments. Very commonly used method is DCF. And DCF is used to, predict the cash flows for upcoming years. Then you are discounting it to arrive at the present value of the organization or of the business units. Other techniques includes comparable company analysis. Okay. And there are a lot of other techniques that we will cover. For startups, there are different types of valuation build models that are built taking into consideration different types of assumptions. So we will touch that in our future videos. Then there is scenario analysis. Scenario analysis is somewhat, has certain similarities with sensitivity, but the scenario analysis is kind of different in a way that it simulates different scenarios. It is not talking specifically to drivers of business. It is considering the overall scenario. For example, if any calamity hits, if your business is dependent on weather conditions, so what scenario, so considering such kind of scenarios to assess the potential impacts and developing contingency plans. Normally, whenever we are creating any budget or any financial statement prediction, normally we do a best case and a worst case scenario. Okay, so this is scenario analysis. Then there is a capital budgeting model. You might have already read about NPV, IRR. So this is commonly used to evaluate investment opportunities, whether to invest in this or not. Okay, Then, most commonly, it is financial statement models, three statement models, building profit and loss, building balance sheet, and CFS, to understand the implications of strategic decisions. Let me correct this. So, yeah, so these are, some of the models that I would want you to have an understanding. And definitely in our upcoming videos, we will learn on how to create these models from scratch. Certain, I will try to cover as many as techniques as I can from my experience. I hope you have enjoyed this video. We'll see you in our next video. Thanks.